Hello, everyone. My name is Nilsson with 25 years of experience of foreign exchange across Citibank and Lloyds Bank. And I'm very pleased to be here with Matthew Longhurst, who would talk to us a little bit about TreasurySpring's new venture into currency conversion. How are you today, Matt?
I'm good, thanks. I'm good. So I'm Matthew, co-founder and COO of TreasurySpring. For those who haven't come across TreasurySpring, we're a cash investment portal democratizing access to some of the safest cash investments, traditionally the preserve of the largest investment banks. For example, secured lending via the reverse repo market to globally systematic banks. We do this through our digital portal, issuing TreasurySpring's proprietary fixed-term funds. Today, however, we're talking about currency conversion, a feature we've launched on the platform, which we're really excited about.
Thank you very much, Matthew. So maybe could you talk a little bit more in detail of this new capability of currency conversion you're introducing?
So if you think of the traditional FX brokerage market, which tends to rely on request for quote execution, holding a price for a number of seconds at any time during the trading day, users are required to make a subjective decision as to whether the price they see represents good value given the market conditions at that precise moment. At TreasurySpring, we've decided to approach currency conversion in an entirely different way. We always transact currency conversion against a regulated benchmark, the global standard WMR intraday rate, as published by FTSE Russell every hour, on the hour, throughout the trading day. This means there's a transparent audit trail for every conversion. The rate the client gets is always a predetermined spread from this independent, unbiased, and objective view on the currency markets at the fixing time.
So my experience with foreign exchange markets is rather opaque. So can you just go in a little bit more detail about transparency you are providing the TreasurySpring users for?
Sure, so it means no more scrambling to lock in a rate before it disappears. You have a clear and reliable benchmark to work with. You actually won't even know what the rate is until it's published a few minutes past the fixing time. But you do know that it's a rate guaranteed a fair reflection of the markets at the fixing time.
So I can see that being quite different from the usual way of doing foreign exchange. So maybe can you go into a little bit more detail of how the conversion actually happens?
The conversion is executed on a same-day settlement, that is T0 basis. What this means is that users have use of their funds to withdraw or invest into another fixed-term fund within minutes of the benchmark being published, not days, as can be the case with market standard T+2 settlement. This minimizes credit and counterparty risk and provides an overall more intuitive and real-time service to our clients. A client can convert funds coming out of any redeeming FTF simply by choosing Convert as the next action on that fixed-term fund before the redemption cutoff. A client can also choose to convert on the way into a fixed-term fund by sending funds in a different currency to the base currency of the FTF they would like to subscribe for, and then simply clicking Convert on the cash holding once it's showing on the TreasurySpring portal. The funds will be converted with reference to the 11 a.m. London time WMR intraday mid-market fixing and be available to either withdraw or resubscribe by 11:30 a.m. Because clients decide in advance how much they would like to convert and into which currency conversion orders can be submitted hours or even days in advance, knowing that they will be converted on the redemption date with reference to the WMR benchmark rate. So no more chart watching or buyer's remorse about when and at what price you executed. Just to clarify, if you're an FX trader and you know exactly when and what price you need to trade, we're definitely not the place for you to do your FX. And I would love to know your secrets. In reality, as far as most, if not all, FDs and treasuries are concerned, the currency markets are a random walk. Making subjective decisions on the direction of those markets is not within their job description. Saving their time so they can focus on their other duties while reducing risk and transaction costs is, however, a big value add.
But for the people who aren't familiar with WMR fixing, could you maybe give us a little bit more information regarding it?
The benchmark WMR intraday fixing rates published by FTSE Russell, a leader in financial market data, are derived from real and verifiable market transactions and apply multiple validation techniques, ensuring they are robust and representative of actual market activity. The benchmark is based on huge volumes of actual transactions within a 5-minute window, spanning 2.5 minutes before and after the hour, to ensure a fair and accurate reflection of market conditions. Additionally, we always key off the WMR mid-market rate, whether you are buying or selling a particular currency pair. This further increases transparency to the client as there are no hidden spreads in the bid-ask price. A further benefit is that any risk of increased bid-ask spreads is not borne by our clients, making it safer to transact even when currency markets are showing high levels of volatility. WMR fixing rates are not new. They've been around for more than 30 years and have been used for pricing purposes by large asset managers and pension funds for much of that time. In fact, for these institutions, the independent, unbiased, and objective view on the market was an essential feature. What's new here is the ability for an entirely different segment of the market to gain access to currency conversions based on this highly regulated benchmark, removing execution risk almost entirely.
Okay, thank you. So just a little bit curious of what made you decide to build this feature in the first place. Did you feel there was a specific gap in the market you wanted to fill?
It really stemmed from observing our client base. Many TreasurySpring clients, ranging from SMEs to large corporations, operate across multiple currencies and face inefficiencies and extra costs when converting funds outside the platform. We saw an opportunity to streamline the process, allowing clients to seamlessly convert between currencies within the familiar TreasurySpring environment, where they can already invest their cash in a whole range of fixed-term funds across multiple currencies.
It seems like you built this around your existing client base a little bit, but going forward, are you seeing bigger visions?
Absolutely. This new feature of currency conversion aligns with our underlying ethos of democratizing and simplifying access to financial markets. We are making these features available to all our clients, regardless of their size or FX expertise, and believe these features will be attractive even for some of the most sophisticated participants on the TreasurySpring platform, especially in relation to the auditability that WMR rates provide.
So from a client base, what kind of clients do you think the feature will fit the best?
We believe our approach to currency conversion has very broad appeal, from smaller SMEs, VC-backed startups, private equity firms, all the way up to publicly listed corporations. Essentially, anyone who operates across multiple currencies and is looking for the most efficient way to manage conversions alongside earning yield. We're addressing a fundamental need in both a sophisticated and accessible way. Imagine, for instance, a cash-rich UK scale-up that's expanding globally. They're hiring in new markets and have revenues and operational costs in different currencies. In order to naturally hedge their currency exposures, they need the ability both to earn yield in different currencies and rebalance between those currencies where appropriate. By adding currency conversion, we allow firms like these to meet most, if not all, of their yield and currency needs in one place, increasing efficiency and reducing operational overhead. Our clients need never miss a day's return on their cash again by taking cash off platform and wiring it to third-party brokers.
And obviously, we're launching now. Could you just give us a little bit of taste of which currency you're including on the platform to start with?
We offer the main three currencies of US dollar, euro, and GBP, as well as Swiss franc and Canadian dollar. We will add more currencies over time based on client feedback, with Mexican peso, South African rand, Singapore dollar, and Australian dollar being likely next candidates.
In terms of pricing model, what kind of platform are you using for the currency conversion?
Our pricing is completely transparent. We use a spread-based model where a fixed number of basis points, i.e. a fraction of a percentage charge, is applied to the benchmark mid-market fixing rate. Generally speaking, larger conversions will attract a smaller spread. The client will always know what they are paying in terms of spread, so there are no surprises.
Thank you. And in terms of transaction size, is there a minimum and maximum?
The minimum conversion is 50,000 US dollar equivalent. It's important to note that our solution is not aimed at retail size, so we believe this strikes the right balance between the needs of some of our smaller corporate clients with repeat conversion needs, for example, to meet monthly payroll in different jurisdictions, and the typical needs of our larger clients. There is no maximum size, although we would ask clients to get in touch if transactions are over 100 million US dollar equivalent.
And in terms of counterparty risk, could you just maybe give us a little bit more information regarding if there is any counterparty risk for using the TreasurySpring platform?
TreasurySpring only uses the largest investment banks to facilitate currency conversion. These institutions typically have ratings of single A or better. Additionally, since all conversions are pre-funded and transacted same day, intraday exposure to these counterparties can be counted in minutes rather than hours or days. As always, reducing risk and especially counterparty credit risk is built into TreasurySpring's DNA.
Thank you. And in terms of moving forward, do you see other currency-related products being on the roadmap?
As well as adding additional currencies, we're looking at the possibility of allowing clients to hedge the redemption proceeds of their fixed-term funds ahead of the redemption date. For example, if you had a 3-month GBP fixed-term fund that had rolled down to 2 months, and you decided you wanted to lock in the current GBP US dollar conversion rate plus the forward point spread, you would be able to fix the conversion rate at that point in time instead of waiting until the redemption date of the fixed-term fund. This would open up a whole range of currency hedging strategies facilitated by your fixed-term fund holdings. We're currently consulting with clients to ascertain demand.
Thank you very much, Matthew. So in essence, TreasurySpring is launching a transparent, efficient and cost-effective way to manage multiple currencies, all within the same familiar platform that they are using on a daily basis for the fixed-term funds. Love the fact that you've kind of removed the guesswork and hassle associated with the traditional FX markets. And obviously then by doing that, giving the businesses greater control, auditability, hence greater peace of mind. On that note, thank you very much, Matthew. And I'm looking forward to see all TreasurySpring's clients on the platform very soon doing currency conversion.
Thank you, Anders.